Crypto price action is trading sideways after a really rough week last week. Let's dive in today into how some of the other markets are affecting the crypto market, as well as let's look at what is going on with the crypto market itself and take some time to look at some of your picks for those who put suggestions in the comment section in last week's price analysis with Paul. Welcome to the Crypto Rain channel. I'm your host, Jay Rain. If you like money in crypto and you're looking for a real investor take on the crypto market, you can join our family as easily as liking this video and subscribing with that all notifications bell enabled. Special note, we're not financial advisors. I'm a crypto investor myself. Paul invests in crypto in many markets. And do note that I do own or plan to own most of what I talk about on this channel, except the stuff that I don't bring up, which on these videos for Thursdays, if you put suggestions of what you want us to review the following week, we will take a look at it. All right, special thanks to our Patreon members. We do have private Discord that our Patreon members get access to. Make it rain on that like button. Strap in for the show. Let's welcome Paul from DeFinity for some price analysis.
Hey guys, how you doing? It's great to be here.
Paul, so good to have you. I really look forward to these chats with you, and I love hearing your analysis on some of what's going on.
Thank you. No, it's always great to be here. It's always great to have a look at what's going on and to look at the audience picks as well. So there's a lot happening, as you know, and some really important things that are going on in the markets that I think people should know about.
Yeah. Exciting. Well, I wondered if you would give us a peek into how some of these other markets are going that affect crypto, like the dollar, some of the bond yields, and some of the other things. And talk about what you see going on.
Yeah, absolutely. Yeah, as we've mentioned, and as you've just mentioned now over the past few weeks, there have been some important things that have been driving the markets here, and one of them has been the ascent of the US dollar and how broad that US dollar rally has been spreading across the markets. It's all driven by a rise in yields and the fact that the Fed have been raising interest rates due to inflation. And the market thinks that there's going to be more interest rate rises. Personally, I think that the June interest rate rise will be possibly the last one for a little bit, and that could be the inflection point of the market. So for the moment, just at the pure technicals, what we're seeing is the dollar is still rising. So that means that there is still pressure in the asset markets. The fact that the dollar is going up, it means that US companies are not earning as much from their overseas currency trades as they normally would. They're not getting as much in. It's also a competition to cryptocurrencies, and also the rise in yields means that people can actually take money out of slightly riskier places and put it on deposit and earn a return, which you couldn't do before. Some of those yields were in fact negative. So let's look at the chart of the US dollar. This is the dollar index, which is a basket of currencies against the US dollar. And we were looking for a move, an extended move to 102, which has been breached, and the market is still going up. And I think we talked about this a couple of weeks ago and last week as to how we thought this would continue higher. And the big takeaway for me for the moment is, yeah, it could correct a little bit, but this isn't enough to say that the market has turned. So this trend is still going, and so I'm still expecting more on the upside. And therefore, there is still potential for equities and other markets to drop. So if we look at the yield markets, if I just pop down to where I've got my yields, this is the 30-year bond. So this is the ultra long bond. And as you can see, that's trading over 3%. And there is no technical sign that that has reversed. And it doesn't mean it can't go down, because of course it can. But at the moment, it's still ascending. That's still a trend. We can't fight it. It might get a bit sticky around this 3.45 level, but at the moment, that's still going up. US 10-year yields, a target of ours was this 3.25%, which came very close to hitting, and it backed off there, which could have been why the markets bounced in the way that they did. But that trend, again, is still upwards, so it's not enough. We're at this crossroads where if yields start to squeeze higher, we'll get another move in the dollar, and potentially we could see another move down in the asset markets. Now, equities are having a bad day today. anyway, and I know this is going to go out on a Thursday, but it is Wednesday at the moment. The rally that we saw in the S&P came very close to a very important Fibonacci level. Actually, if I show you in the NASDAQ, which has been leading the way down, it's leading the way up, now it's leading the way down. There's a 50% level that it turned around on, which was sort of bang on. And this is why traders, investors look at Fibonacci levels. Just explain how I've created that. If we go back and have a look at the significant low, you find a significant low, you find a significant high, and then you break that up into 38.2%, 50% and 61.8%. So those are known as the Fibonacci retracement levels. So it's not guaranteed that the market will react at those levels, but they do often enough for it to be worthwhile to monitor them. This is why pretty much it's the most consistent thing that investors look at in the market. No matter what technicals or fundamentals they're looking at, they always tend to look at Fibonacci. So the 38.2 was a rally. It saw a rally in the NASDAQ. And then we broke it, which kicked off this big move to the downside. We've just seen a rally off the 50%. So it's respected both, which is kind of unusual. It doesn't normally do that, but it's starting to weaken again. And for this to be a reversal, we need to see more price action. We need to see a greater consolidation. So look, the low might be in. It's possible. It is possible that this is it, because the market did capitulate. You've heard me say this before about at the end of a trend, everybody panics and they sell and they just shut their eyes and that's it. And you get this move down and then a sharp move up. But I'm sort of 50-50 on it. I'm not completely convinced that's it, because the dollar still looks like it wants to go up. Yields still look like they could potentially go up. And this is starting to weaken again. So if it gets anywhere near this support level again, I think it could break and drop to the next important support level, which would kind of fit in with an extended move in the US dollar and an extended move in the yield. So at the moment, I'm going with that as a favored strategy, but there is light at the end of the tunnel. We could be near the end of this correction. It's definitely the beginning of the end. And that means that there are going to be some really potentially fantastic longer term buying opportunities.
Yeah, it's interesting how the dollar strength continues to go up, and it broke that important level and it's continued up. And like you said with that chart, it looks like it's going to go up further. And as it goes up, and part of the reason, like you said, is the yields on the US dollar going up. So essentially, share with me, is that what's happening? Is people are sending money from other currencies into the US dollar so that then they can get the higher yields on them than they could in other currencies?
Yes, there is that element, but it's also a question of fear. Like some people were thinking that because of the war in Ukraine, that this could spread. They're worried about an invasion of Taiwan as well. And so when that happens, people suddenly decide that they don't want to take any risk anymore, and they pull their money out of potentially what would be regarded as risk on assets. So cryptocurrencies, some of them come into the realm of risk on assets. It's money where if you're sort of happy in the world, you think, okay, I've got some money to play with, I'll stick it in there. But the market it operates in the same way as human emotion. So when people are sort of daring and reckless and willing to gamble, they'll put money in places that potentially they know they could lose. But when they're fearful, they reverse and they put it where they think it's safe. And US government bonds are one of the safest places in the world. And you might think, well, hang on, why aren't all government bonds the safest, particularly safe? And the reason for that is that sometimes governments actually default on their debt. Russia has in the past, for example, defaulted on their debt. What does that mean? That means that they just say, you know what, we're not going to pay back any of the money that you've lent us on our bonds, and we're just going to not pay them. South American countries have done the same. So those areas are considered much higher risk. And in the same way that if you're a higher risk borrower as an individual, the bank will charge you a higher rate on your overdraft. In the bigger world of corporate and government, that's how it works. The market says, well, you're a greater risk, so therefore we want a higher rate of return. And they're happy to get a higher rate of return when everywhere else has got very low interest rates. But when they're fearful, they pull their money from those greater returns, and they're looking for what we call return of capital as opposed to return on capital. So they might not think, they might not worry that they're not getting a particularly high rate of interest as long as they get their money is relatively safe or they're getting something. So as bonds, like some government bonds in Europe, have been trading at negative yields, which means that you're guaranteed to lose money if you invest in them. That's been one of the reasons potentially why crypto has had such a run, because if you're guaranteed to lose money, the market is looking for places where it can make a return, a decent return, and actually not guaranteed to lose money on that particular return. So people were saying that was one of the reasons why Bitcoin, for example, was supported so well, because the interest rate environment was so favorable. But what's been happening as the Fed has been talking about rates going up again, that is it's shaped their view and changed their view of the risk. Now, I think it's a more nuanced argument, because longer term, while the Fed is actually printing money and fiat currencies are constantly being devalued, something like the precious metals markets and the cryptocurrencies represent a good opportunity, because you can't print them. So therefore, they could be a really good inflationary hedge. And we know that inflation is running extremely hot. So at some point, that will kick into investors' mindsets. But when they're in fear mode, it's very hard to get them out of it.
So, yeah, with that on precious metals, could you pull up the gold chart? I'm curious to see what gold is doing.
Yeah, very good point. Now, gold, if I can look at gold in the context of gold and silver and platinum, we'll run through them all. So gold has been in a correction. So it had a big move up on the war. So everyone's saying, oh, war, gold should go up. And I've been a long-term bull on gold, but I was a little bit disappointed with how it traded and a bit cautious. Some of the other, you got to look at everything in context. So silver was not actually trading particularly well. It was in a range, and I couldn't see this impulsive breakout that would confirm that it was time to buy. I wasn't sort of thinking I was going to miss anything. I remember one of the early shows I said to you, when I look at a market, imagine I'm going to go on holiday and think, am I going to miss out on a trade if I'm not in this? And I just didn't feel compelled to buy it. But there was all this fundamental reasons why you should buy it. But that's, for me, not quite enough. I need to see confirmation in the price. So we've got silver is looking a bit heavy. Platinum is just still in a range, testing the bottom of the range. Palladium, which has been very volatile, it had broken up and now it's coming back down again. Very similarly, for me, there's not the call to buy there yet. So gold is favored. I do like it, but it hasn't gone into this big impulsive trend where prices are accelerating. Part of that could be the strength of the dollar. I think long term, if we sort of take a step back, if we go back to 2016, the trend is still bullish. So it's just a question of whether we get a pullback as far as this 1670 area, or whether this is it, whether it's going to turn around now. So I'm getting ready. I think within the next month, we'll know whether this is starting a very big bull run. So if the Fed are behind the curve, and I believe that they'll be forced to be behind the curve because they won't be able to raise interest rates because the economy will slow down, I think once the market realizes that, and then this will take off. So I do believe that we're getting closer to that point. Now, it might move ahead of that, but so far it hasn't moved as yet. So I'm looking for evidence of what we call impulsive kickoff to start this trend. And we might have to miss a bit of it and wait for a pullback and then jump on it.
So do you think a lot of people are going to cash, specifically US dollars, because then they can always deploy it later if they see an area ready to run? Because we're seeing that across. Even you would think maybe gold would be going up because inflation is high and other things, and it's not. It's correcting. Silver, all the precious metals you just showed. So everything's been correcting except the US dollar, and bond yields have been going up. So
Yeah.
as bond yields go up, US dollar, it seems like across equities, precious metals, even crypto, people have been going to cash while they're kind of sitting on the sidelines looking at where they want to make their next move. Is that a fair summary?
Yeah, definitely. And it's one word, it's just fear. It's just been fear that's driving the move. And it's again unusual that certain other risk off currencies like the yen and like the Swiss franc and the yen have also been weakening against the US dollar. So it's been a big fear trade that has caused this move, and partly also because of the way the Fed have been talking so bullish about raising interest rates like multiple times this year. So that day had to come because interest rates have been so low for so long.
Mm-hmm.
But inevitably, it comes at a time when the market is least able to deal with that correction because they've been spending so much money. So when you're printing a lot of money because you've got, the COVID situation, and successive governments have just been very loose with their policies, it's you're just handing the buck over. There's the problem with modern politics and modern markets, and the proponents of sound money theory. They're known as the Austrian economists, and the Austrian economists predict this cycle. They say that this always happens and will continue to happen because governments are always fiscally imprudent with their management of the economy, and so currencies eventually will completely go to zero. And that's why they're always buying gold, or they want to own something like gold. But it's also why cryptocurrencies are so interesting, because in the past we didn't have anything that was an alternative, whereas now we do. So that's why I keep mentioning cryptocurrencies in the context of a potential long-term hedge against inflation, because 100, 200, 500 years ago and more, there are cycles that have been going on in this, where currencies have been created and destroyed, whereas gold has been around for virtually forever, and nobody says, no thanks, I don't want any gold. Everybody accepts it right around the world. So precious metals are so important. But again, that was in the context before we had the opportunity to trade something that you couldn't print. You can't make it. The governments can't control it. And that's why the cryptocurrency space is so interesting. And potentially when we hit this sort of inflationary boom, which we could be a year away, we could be 2 years away, I'm not sure. But what you'll see is the asset markets will start to move ahead of that. In the same way that the dollar moved ahead of the war, these asset markets, which are looking bombed out now, when they start turning, it'll be because the market is saying, okay, we're going to go into this massive inflationary cycle, and therefore we're going to start hedging. So gold will go up massively, silver will go up massively, and anything that hedges you against inflation will go up massively. Oil, I think, will probably trade over $200, possibly more. Get into anything that can hedge you, and stocks as well potentially could be going up.
Yeah, it's going to be interesting to see how this plays out. I'm curious to see what the Fed will do next, right? Inflation's still been high, but there's signs that the U.S. economy is slowing down, a lot of signs that it's heading towards recession.
Yeah.
So maybe they won't be raising interest rates so steep, so fast. They're kind of caught between a rock and a hard place. They need to raise them in order to curb inflation, but they can't raise them too much where they tank the economy.
Yes, exactly. And people are talking about demand destruction, and that means that people just aren't spending money, and so you're destroying demand, which is what happened in 2007 going into the crisis of 2008. We had oil at $147, interest rates in the UK, I'm not sure what they were in America, but in the UK they were over 5%, and the Bank of England was talking about raising interest rates when you could see that everybody was under pressure. And so they tend to, there's a description where you have, if you can imagine a brick with a piece of elastic, and you pull the elastic band and nothing happens, and then suddenly the brick moves. And that analogy has been used to describe the economy, because it's a non-linear dynamic system. Nothing happens for a while, and then suddenly everything moves at once. And the Fed's response will probably be like that. They'll look at their numbers and their models, and they'll say, well, the economy's okay, but inflation's a problem, and then suddenly they'll start to look at data that's lagging that shows that the economy is going into recession, but the market will already be ahead of that. They'll already be looking for a turnaround. So once they see it and they say the economy is doing really badly, the markets are already turning, which is why I use technicals, because it's sort of ahead and the market's much more forward looking. So people who look at data are normally behind the curve because the market's already anticipated it.
Yeah, makes sense. Would you mind if we jumped over and looked at the Bitcoin chart and
Yeah,
just
sure.
see what we can see about the price of Bitcoin?
Absolutely. So, very interestingly, we had a 61.8% retracement and a trend line that came in just around the low. So very it did sort of break through, but given how volatile the markets are, you've got to allow a little percentage breakout. You know, you're not going to get absolute precision on these levels, but 26,265 was the support level, and we also got what's known as a spike reversal. Now, a spike is when the market goes down and then trades back up. So it's like, remember I was talking about putting your hand on the hot plate? Well, that's exactly what it did. It just went down and then those levels were rejected. Now, normally what you would see is a consolidation and then a breakout again, just as aggressive to the upside. So we're still in that window where that's possible. This is why I'm not sure if we've seen the low yet. I need to see a bit more confirmation, but that is encouraging. That's good. But again, everything's starting to sag a little bit, and it could be dollar pressure. So I'm a little bit concerned here that we're going to trade back down again. Potentially, we could take this low out, and then it would just go down to the next level. And if it does that, you know, we could be looking around sort of 20,000, that sort of area. But again, that move, anything that goes below here, I think is the last of this phase, because you know this correction has been going on for a while. The market is extremely bearish, and I don't think that you know, people are talking about silly numbers on the downside. At the moment, I just don't think that that's the case. I think we're gearing up for a major buying opportunity. So we might have seen it, but I'm going to step through cautiously and say I would like to see the market trading above at least this 31,500. Just to create a bottom. The last time we saw a low like this and a spike in the markets, it was after the terrorist attacks, the September 11th terrorist attacks, and the market went into a spike and then it went into an inverse head and shoulders. So I'd like to see some form of technical pattern just to confirm that we've hit the low. And I'm keeping my options open here, but it would be nice if it is, because there's enough to justify it. We've got the Fibonacci level, we've got the trend line, and we've also seen a spike, but it's just that everything's starting to feel heavy again, and I think we've got to be just a little bit cautious. If I may, if you don't mind, I'm going to just jump into Ethereum just to show you where that stopped, which was, this is again why we use these technical levels, because 1, 2, 3 major hits of this low 1728, and lo and behold it did it again. So very similarly, it is spiked from a significant support level. So again, the longer it can stay above this, the more positive I will be. I don't want to see it trade anywhere near or back into this support, because that tells me the market doesn't tend to give you two chances of this. If you get, there's only one chance on a spike, and if it starts to trade into it, the chances are it's going to break lower. So again, we need to see about another week of price action, and if it can stay up here, that will be a really good sign. Short term, yeah, I accept we might see you know, a rally here, but whether we've hit the low, we've hit a low definitely. Have we hit the low? I don't know yet, but I'm starting to get excited about being more aggressively bullish, and I think, you know, we're not that far away from the low, even if we have to endure another correction.
Yeah, you mentioned before that a lot of people have some crazy low expectations or predictions. And when people look back on the charts, if they weren't here during those times, so they look to the left on the chart and they see, oh, this big drop in March of 2020, and they see these other big dips and they say, oh, I wish I would have bought here. And what's funny is every single one of those times, whatever the low ended up being, there were people that were predicting that it was going to go twice as low or way down and even to zero, and that almost everybody turned bearish during those points. And so it's easy to look back and say I would have bought there because you weren't in the middle of the emotion back then. But we're in a point like that right now. So what kind of choices do you make in this kind of time frame is really up to you. But when I hear so many people making such bearish predictions, that's usually a sign to me that I'm really happy with where things are at. And likely we're near a bottom. And maybe the bottom's in, maybe we'll have another drop, but that we're somewhat near that bottom is my guess.
Yeah, I think that's absolutely right, and you're right to look at sentiment because it is so important. It's also something that you've seen as well in the property market. You know, when everybody's bailing out of something and hates an area,
Mhm.
you know that's a sign of capitulation, and you could be near a low. And then when it's too easy money, then it's signs that we're getting near the top. So definitely more bears around than bulls, and that's a good sign. We need that for the low to be in.
Yeah, absolutely. Cool. We have some audience picks of some crypto projects they want us to look at. These are altcoins. If you have a suggestion of something you want us to review next week, if you put it in the comment section, not in the chat section, but the actual comments, give us up to two. And we really like if you write some detail about it on what you like about it and why you want us or what you want us to look at with it. Why don't we start off with ERG?
Yeah, absolutely. So ERG. Now I had a look at one or two very quickly, and I just want to check that this is the right one. So if it's so is
Yeah,
it that's
currently
that
trading right around 250. Yep.
yeah, okay, great. So that is the correct one. Um, so this looks like it's heading towards like a 50% retracement. So what I would do is I would put in um, a retracement point in here, and where's it gone? Here it is. No, it's not that one. It's that one. Okay, Fibonacci retracement. Here we go. So I would take that low because that's really significant. I'd take this high, which is really significant, and I would look to see where the retracement is. Now, because it's in a log scale, it's obviously gone much further. So I think where this potentially could be an important low would be around this level here, this 1.25. Now, this was key. This level here was key, and it's broken below it. The trend is still down, so I've got to be cautious. So this will have to be a wait. I mean, I know most of the calls are going to have to be a wait until we've seen some significant reversal patterns, and there hasn't been time for that unless there've been spikes. But it's broken this low, which is an important point, and there is this trend line in which is still taking it down. But there is some fantastic support coming up. And I think on a first test basis, very short term, in other words, if it can get to 120, then I'd be looking to buy, for a 1 day, 2 day period, just because it's such good support. But at the moment, I'm going to have to wait because the trend is still down and there isn't much evidence of a reversal. Now, that doesn't mean that it can't reverse from here. That's absolutely possible. It just, for me, needs to do a little bit more work and start trending up and show some evidence of strong support. Now, I want to draw your attention to something here. And if you look at how this low has developed and look at this low and how this developed, very similar. So the way it went down, went up, came down, and then broke up. But look at how when it started to move, it was really impulsive and aggressive. That's the sort of thing I'm looking for. I want to see some sharp candles that kick off the move to show that sentiment has changed. So that's why I can't say it's happening now. But if it does happen, then that would be a really good sign. But for the moment, I think it's a wait.
Yeah, for me, this is a wait too. I'm not seeing anything on the chart that I'm in love with. Although I like to buy cheap, there's enough signs that it might go cheaper. So
Yeah. Do we know much about what it is, or is
I
it?
don't know. This one's super close. Powering the future of finance. Ergo is a next generation smart contract platform that ensures the economic freedom of ordinary people through secure, accessible, and decentralized financial tools.
Hmm. Yeah. I mean, it's overall, considering the trend down here, it's done okay. You know, this is still part of a bullish trend, and so it's not like it's trading right near a major low, and so that's why I kind of like it, and I'm looking for levels to potentially pick it up on. But at the moment, with everything else going down, I think we've got to be cautious.
Yeah, exactly. And tons of stuff are on sales, massive sales, and sales at different levels. Let's take a look at COTI. COTI is on a big sale, as is most everything.
Right. So COTI is let's just check that. Yep,
Yep,
that's the right
that
price.
should be it.
Yeah, so this again, look at how support is matched again by prior support. So support and support. Is this a default? I don't know what this is, but in terms of its its sector, but that has hit a really good support point. You know, I'm going to have to be cautious because again, the big picture, but I like where it stopped. That's resistance, support, and support. These levels are kind of there for the taking in the very short term. The problem is I don't know when I'm going to next look at this, so I have to be, you know, if it was a you could buy it short term and then wait, then I would say you could buy it now and with a very short term outlook. But if you're looking like further out, I just don't know whether this will crumble and it start to break it again. If it does break that low, you know, I would get out because that's such a good support level. I just would not want to see it go. But I can sympathize with anyone who'd want to take it on that support level because it's such a good point, and it showed support and activity around there before. So it's at 0.089, so about point zero nine, which is again, you know, a good, it's a good low level, and it's roughly, I know it's on a log scale, but it's roughly a 50% retracement as well. So yeah, I mean, really like that support, but I'm a bit torn about the broader picture. So I'm going to have to err on the side of caution for now and say wait. But that is a really good support level.
Yeah, COTI, they just launched I think it's a decentralized stablecoin on Cardano's platform called DJED. I don't know the specifics behind it, right? So you have fully collateralized stablecoins, you have under collateralized stablecoins. And so Luna's UST is what we call an under collateralized stablecoin using algorithms to try to keep the dollar peg. But you see the susceptibility of under collateralized stable coins. And so I don't know the details on DJED. I do like the CEO of COTI, and I've watched a number of interviews with him over the years, and really good, solid team. It's at a good price. I'm tempted to buy some now. However, I'm just going to wait some more and kind of see how it plays out. I do think the Cardano ecosystem is undervalued and it has a lot of price gains potential. It's been in a cool off, Cardano itself, since its conference that happened like last September. And so even before this recent pullback, Cardano's kind of been out of the spotlight and things tend to rotate in. And I think Cardano's ecosystem is likely coming soon. But even now, I just like to get better deals. I'm pretty happy with a lot of my positions. So I don't want to sell in order to buy something unless I saw this at an even bigger discount.
Great, interesting. I mean, I think also whether it's a buy or sell, it's still fascinating to look at these individual technologies, and I'm sure, you know, when things are more clearer and starting to move higher, this could be potentially one of the first ones that we come back to. So whether they're a buy or not, it's really great to analyze them. So thanks again for suggesting that. So the next one is DRF. Is that correct?
Yeah, this is
Yeah.
Drife, and we did an interview with the CEO just like 2 weeks ago.
Hmm.
And I missed a really important question. One of my audience members totally called me on it. BBC went down and did a video interview with them because they're building like a decentralized Uber. And they launched in India because drivers weren't making enough. Even though they've raised their rates, like Uber and Lyft and some of the other companies have raised their rates a lot of that was going to just the investors, the stockholders, and the drivers were getting squeezed. And so they were having a hard time making a living. So Drive felt like there was potential to come in, use decentralization to keep overhead costs lower, and help the drivers make more money, as well as the riders pay a cheaper fare. And they did something with that is interesting, that the drivers themselves, they pay a monthly fee to Drive, and so they then keep 100% of their commissions. So Drive doesn't take a share of like the driving fees. And so it is a different model, and it'll be interesting to see. So BBC, according to what I heard, like 3 or 4 months ago, went down and did a video with them and filmed them. Hasn't released it yet, though. So I forgot
Okay.
to ask her what was
When
going,
when's it
what's
going
the
to be
latest you've
released?
heard on that. Yeah, is it going to be released? Because sometimes they go and film things and then they put it together and they're just like, nah, we're not going to air this. Um,
Yeah, there's a TV program that I watch of the BBC's called the BBC Click. It's BBC Click. You might be able to get some of them on YouTube, and it's really interesting because they do talk about advanced technologies of various kinds. The way they tend to work is they kind of pull everything together in like, say for example, energy, and then they'll start looking at all the different types of solar panel and alternative energy and hydrogen and stuff like that. So they kind of cycle through stuff. So when they do something on cryptocurrencies, that again, they might then include it in that. So they might be waiting to sort of package a load of things together into one rather than have it as one piece. But that's really interesting to know that that's sitting there in the background, because you've got something called Shark Tank, we've got something called Dragon's Den. Now, whether you pitch something that's good or bad on that particular program, you know that it's going to create some advertising, some free advertising, and inevitably make even in the short term a little boost in that price, or whatever the product is. People will just start buying it even for the short term. So there is that potential boost in there coming at some point. But the main thing is what's happening with the trend, and what are the signals from my perspective. And I think I've been a bit cautious on this because the trend has been down, and unfortunately it still is down, but there are some positives. And one of the positives is this spike down and very sharp reversal that we're seeing here. So you see the way the market has made what's called a spike low, as it went down to here, and it's rejected it and gone back up. Now, that's not enough for a major reversal of this trend, but it's a good start. What we should really see is a break of this downward trend line. That's step one. And then step two would be a break of this downward trend line. So I'm still going to have to wait, but there's signs of buying coming in. And if this can develop into a bigger reversal pattern, then I'd get more excited. But I do love the idea of it. I think it's really nice to help the drivers. It seems to be in the right space, and the fact that the BBC were interested in it is another really good sign.
For me on this one, because I like it a lot, and I did pick up more at half a cent, so I'm just dollar cost averaging into this one. So for me at this price point, it's a buy more. Now I'm just going to dollar cost average a little bit more into it, so it's not huge. Um, and I just, yeah, pick up more of this, and I'm kind of waiting for like it to come back in and get really big and popular. People are talking about it. Oh my gosh, decentralization. Now, whether they make it long term, I hope so. I really like the CEO. I like the team. I like the concept of saving riders more money while the drivers make more of the money themselves. So I like that that introduces more efficiency. I think it makes it even more feasible for people to take rides when using their car doesn't work, right? They just need a ride to the airport. They just need a ride around town, or they've flown in there for business and they're just need to get around without a car rental. So, yeah, I like to see this one do well.
Yeah, I agree. Cool. So the next one.
This one is Solend, and this
Yes.
one has good backers, and I've just had good success in the long term buying projects with backing from companies like Coinbase. And
Yeah.
I think Coinbase Ventures was one of the backers to this, but it had lots of notable investors. I think FTX might have been, or Alameda Research, which is Sam Bankman Fried. And I think they were also one of the backers on this. And so I'd like to buy these, even though they sometimes retrace and get punished in the shorter term. In the longer term, they usually do
Y-
pretty well.
right. Yeah. So this is the correct chart, obviously. So
Yeah.
yeah.
What's interesting is how much it has decreased because a lot of the tokens, there was a long lockup on it. And so I didn't expect so much drop in the short term after launch. It's typical that you see a bigger drop, not right away. Right away, there's a run up, and then there's a bigger drop as pre sale vesting starts happening. So it seems like there's some major vesting going on, though the lockup on the pre-sale investors that I saw the chart for was quite long. And so it has gotten a lot more attractive on price than I ever expected. I mean, right now we don't know what their market cap is, at least not according to Coin Market Cap, but their fully diluted market cap, if all their tokens were in circulation, is 107 million, which means their current market cap might be around 2 to 8 million.
Right. So from a price perspective, I think you're going to probably guess what I'm going to say.
Yeah, I'm pretty sure we know.
That is like you can't catch a falling knife. I've got to wait unless I like the project and I'm not smart enough to analyze it, so I've got to just use the price action. The only other thing I would say is that we are approaching a big technical level at $1, so you could get a reaction against that because it's a round number. But that's all I can see. I can't go back any further. There's no other data really to find any support. So I'd have to wait and sort of kick myself if it starts to rally. But that's the risk. I that's how I would approach it. I've got to see the inverse of this for me to get excited, and I can't see it. So I'm going to wait. But really interesting stuff.
For me, I have a bigger position. I've been dollar cost averaging into it as it's gotten lower. It's really, it's nice to see it even so low to buy more. The problem is when sometimes these extra unexpected dips come, there's so many things that you want to buy and you have to make choices. If I didn't have any of this, I would buy some at these prices. I already have a bunch of it. And so I'm tempted to buy some more, but then I have to move over money specific to the Solana blockchains. I don't know. So I'm kind of split. I'll go with wait for now, though it is high on my interest list, one of the highest on my interest list.
Great stuff.
A great suggestion by one of our viewers. Um,
Okay. So is it ID the next one? Everest?
yeah,
Yeah.
ID Everest.
Okay. So let me just check that this is the right one. Uh, okay, that's not because that's not current.
It's trading about 10 cents.
Yeah, this must be it. You
Yeah,
can see from the spike. Yeah. So again, this is still a wait because we got this downward trend. We had this consolidation here before it broke the lower end of the range. So you can see how it broke this this lower end of this range, which should have held. So it had a little dip, went back over it, and then ultimately broke and went down. But similarly to a lot of the other markets, we're seeing this spike pattern. So we've seen the spike and the high volume, and then it's just consolidating here. Now, normally when you see a spike, as I was saying before, the market spikes, go sideways, and then goes up really aggressively. So we haven't seen that surge that's taken us, it's like taken off from the low. So we've seen the buying, this is so cheap, I've got to have some type buying, and people panicked into it, and some people have panicked bought it as well. But we haven't seen it extend, and it's that second bit that we really need to see in order to confirm a longer term base. So for the moment, I'm going to have to wait, because there's only this one element that says that we've hit a low, and I need a bit more than that to be confident. So it wouldn't surprise me if it's squeezed higher, and I'd be really happy if it does, but I've got to wait until there's just a little bit more there to say buy.
Yeah, for those that aren't familiar with this, D is going to share my screen. There we go. Your global everything account. So it looks like it's a wallet that you can stake and receive returns. You can swap. You can buy and sell. So this is the way, the direction many projects are going. Their website is very clean and pretty. It looks like their user interface on their app is clean and pretty. I don't know that I've heard of it before. Maybe I have, but they have all these partnerships listed. What these partnerships usually mean is they probably use Chainlink for their price oracle. They probably have integration with Polygon, Kyber, Ocean, Aave. Visa would be interesting to hear what the details on that are. So interesting. If I look at the prices on this was once during our previous run up in April of 2021, almost at $2 at the very top. So $1.86 is currently about 5% of that price. Now, I think prices have kind of come down. It used to be that the Bitcoin halving used to be the major driver in the Bitcoin cycle. As more factors have come in, that it seems like that Bitcoin halving isn't as relevant as it used to be, though it's still relevant, just doesn't have the strength. So we did have that big March push that was quite big, and then we had a big retracement through July, and then we kind of had what I call the metaverse run up, as Facebook did their metaverse announcement in October and November, which affected some things, but we've generally been in a cooling period since that March and pulled back. I don't think this bull market is over, though, and I know a lot of people do. And so I'm looking for good pickups that if money comes into the space, and this is how that could play out. People are sitting on the sidelines in cash. They're kind of scared of what's going on with stocks. Maybe they still have some in stocks, but they've sold some. They've sold some other things to cash, and they're looking at where money's going to flow. Maybe the dollar yields, or the dollar starts coming down again, or the strength of the dollar, and they start putting it into other things and are ready to take risks again. As well as, what's interesting about crypto is it was built to be a hedge against like inflation with the dollar, and it shouldn't be as correlated with stocks as it is, and at some point it might decouple. Right now, it's highly coupled with equities. So as equities have gone down, Bitcoin's been traded like a tech stock by a lot of traders. But should it be? Not really. So if that decoupling happens, it could be that the equities or stocks go down, and then a lot of money starts piling into this space. And if this area starts going up, crypto, and equities are going down, you'll have a lot of people that have money to cash that are kind of like scared, and then they see the gains, because as human beings, we tend to chase gains. You chase the gains in crypto, driving the crypto market up even further. Now, maybe it's my bias because that's what I want to see happen. That's why I think it will happen. I really can't say I know for sure how this plays out, but I don't see why the correlation continues to be so strong when Bitcoin and crypto is at lows we haven't seen in quite a while, and stocks are just barely coming off their highs. My 2 cents. And so projects like Everest are way down and could go up. Now, it might come down further before it does go up. And I can't say I know enough about this on a fundamental level that I would buy. So for me, I would be a wait on this particular one.
Okay, so I think there's just one last one, if I'm correct.
Yeah. I'm glad one of our viewers suggested this one.
Cool.
Let's see if I can get another interview with this team.
Great. So I will. I'll just put the first one and hope that that's the right one. Yeah, it looks like it is. Look, I'd love to know more about what's happening here, because this is a fairly decent bounce in a range trading market. Range trading market in this environment is doing pretty damn well. That's all I can say, because obviously we're seeing very heavy downward trends. So anything that's managing to hold its own, I'm interested in. So not been going on too long, so we've only had price action for this year, but this is a fairly decent rally. Not enough data for me to really make a strong call, other than in terms of placing it next to some other of the other markets. It's doing very well. Where do I think it's broken out? I would say through 5 cents. If it takes this high out, then we're looking at this high at 0.07, so through 7 cents. I don't mind taking it through those levels, because if it can get through there, then we're looking at much higher prices. But at the moment, this is just a consolidation, and I'd have to say wait until I've got more data. But I do like the fact that it's holding its own. This significant low that's just kicked in here is above this previous low. So we've got the emerging potential trend, but it's very shallow. I'd like to see that accelerate before we get excited. And just to balance it off, we've also got, which is why I'm saying it's so balanced, we've also got this downward trend here. So I'd have to wait for which one of these is going to break to give us the directional move. But you have to put it into context of what everything else is doing, and what everything else has been doing has been going down. So the fact that, as I say, it's been going sideways is pretty good and exciting. So I'd love to know a bit more about it.
Yeah, it's a AAA level game being built on the Cardano blockchain. And they've released some really good NFTs that will be usable in the game, some bubble jets and like some other NFTs that are really cool. I feel like the team is strong. A lot of people believe in the team. They do a good job at coming on and doing interviews on YouTube and other places. And so they fit well in the Cardano ecosystem of high transparency. And there's a lot of loyalty in the Cardano ecosystem. And they decided to build on Cardano. So yeah, their price action has been remarkably strong given the whole rest of the market. And usually when projects launch, their tokens go up and then they come way down. And the fact that you haven't seen that means that there's more buy pressure than there is sell pressure. And even amidst this big decrease, there's been a lot of buy pressure. You could see it did come down some, coming down from about 5 cents all the way to at the bottom right around just under 2 cents. Yeah. And bounced right up strong, going up 50% since then. I like the project. I like the team behind this. I think there's a lot of expectations that this game will be fun and playable. And a lot of us that are crypto investors are waiting for good blockchain games that we enjoy playing. Where what I like about blockchain gaming is like you own the assets and you can sell them at any time. And so we're really looking forward to the evolution. Some of these blockchain games get better and better. And so my hope is that Cornucopias is an awesome game and they have a solid team that can produce that. Sometimes you don't know, though, until you get a chance to play it. So looking forward to that one. Yeah, their price action has been awesome. I have a bunch of this, and I'm happy that it didn't go down as much as most of everything else has. I'm not buying more only because I have a lot. So big believer in this project. Great. Well, that wraps up our viewer picks. Like I mentioned before, if you have a pick you want us to review next week, put that in the comments section, up to 2. We'd really love it if you tell us what you like about it and specifically what you want us to look at about it. And for those of you tuning in for the first time, are you ready to be a rainmaker and join what I call the Navy SEALs of crypto in order to level up your crypto game? Now, why Navy SEALs? It's because Navy SEALs are not just above average, but the best, and they don't easily quit when it's hard. And the truth is, you're here when it's what I call hard, meaning a lot of people have left because it seems boring and, it's hard to see the value of what you have go down. But it's those people that stick around during that time that I've seen over a longer period make massive gains through crypto. And so you're in the right place at the right time if you're still here and you're watching YouTube videos during this big pullback. Now, remember, with anything, but specifically in crypto, and just like 15 minutes a day or so of learning day after day, over time, that will put you in the top 1% to 2% with your understanding of the crypto market. And if you use that knowledge and understanding towards smart investment principles, which is what we speak about here on this channel, I think your journey in crypto is going to be a great one. Remember, no rain, no game.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, buy before you could. Was told to buy when it was pouring like a rainmaker should. Buy when it's down, don't chase the boats that I miss. Cause I always made the time in mind. I stick the one out cause I'm patient like that. And I'll wait for the right time. I'll sell when it's high, I'll buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't leave with my heart. The principles are simple, they're leaving a mark. Buy when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling a parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Time is never better, but time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, to study and to know that nothing comes easy, but with knowledge the game show. Thinking out this wrong, cause soon will come a bear market. Learning and growing, and when it's slow will be the target. Naysayers come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. Strong like that, I'll let the others be fretters. 2 years time, the ball will bring back the gains. That makes it worth the effort, cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, let the haters be crafting. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. This game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I'll follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough. And that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck.